This is one of the easiest bullish patterns to spot and one of the most powerful. It's a flat ceiling with a rising floor pushing up underneath it. It's called the ascending triangle, and once that pressure builds, it often explodes into a breakout. Let me show you how to spot it and how to trade it. It usually shows up during an uptrend, and it's made of just two lines. The first runs along the top. Price keeps rising up to the same level, getting rejected and falling back again and again, bumping into roughly the same ceiling every time. That flat line across the highs is your resistance. The second line runs along the bottom. Each time price pulls back, it stops a little higher than the time before, making higher lows. Connect those rising lows and you get a line sloping upward. Put them together, a flat top and a rising bottom, and price gets squeezed into a tighter and tighter space, like a spring being compressed. That shape is the ascending triangle. Here's the story behind it, and it's simple. That flat top is a wall of sellers parked at one price, but the rising bottom tells you something important. The buyers are getting more and more aggressive. They're not waiting for lower prices anymore. They're stepping in earlier and higher every single time. The sellers are holding the ceiling, but the buyers are winning ground. And eventually, the buyers overpower that ceiling, and price breaks out upward. Now, how to trade it? 3 simple steps. Step 1, your entry. You do not buy inside the triangle while it's still forming. You wait for the breakout, the moment a candle closes above that flat resistance line. And it's far more convincing if it breaks out on a spike in volume, because that means real buyers are flooding in. Step 2, your target, how far it could go. You measure the height of the triangle at its widest part, from the flat top down to the lowest low where the triangle began. Let's say the top is at $50 and that first low is at $40. That's a height of $10. Now add that 10 to the breakout. 50 plus 10 gives you a target of $60. Step 3, your stop loss. You place it just below the last higher low, under that rising support line. The logic is clean. If price breaks out but then collapses back below the rising line, the pattern has failed and you're out with a small controlled loss. And one tip to sharpen your eye, volume. As the triangle tightens toward the point, volume usually quiets right down. Then, on a real breakout, it surges. A breakout backed by strong volume is far more trustworthy than a quiet one. Now, the honest truth, like with every pattern, this is not a guarantee. It's an edge, the odds tilted in your favor. You wait for the breakout. You set your stop under the rising line and you let it run toward target. Quick reminder, this is education, not financial advice. Always do your own research. So there it is, the ascending triangle. A flat ceiling, a rising floor, a breakout above the top, and a target equal to the triangle's height. Spot it, wait for the break, and trade it with a plan. I'll see you in the next lesson.